outages today. We're talking thousands and thousands of people were unable to access their accounts. And a lot of people believe it to be regarding the AMD surge, the massive surge in price of AMD that we've seen due to their announced partnership with OpenAI. The reality of the fact is that we've seen this happen multiple times due to other situations with GameStop, AMC, other meme stocks, silver ETF, SLV, in which Robinhood had to literally remove people's ability to buy. And at this point, I don't really think it's as simple as saying, well, AMD surged, Robinhood is down. I think it's more like, well, Robinhood probably doesn't want to pull any buy buttons because the optics are so bad and everyone's going to know they're getting margin called by the NSCC. So let's just go ahead and prevent people from logging in entirely. Check out this video from Jim Cramer. How many times have we heard him say, Bear Stearns is a fortress? Silicon Valley Bank has room to run. GameStop and AMC are a sell, sell, sell. We've seen that time and time again, and the inverse Cramer effect is running strong. Am I right, fellas?
Without a doubt, as always.
Check this video out. Huge shout out to my guy Wolfie, to my friends Pippin and LSD and others here in the stream as well. You're going to hear from multiple people, not just myself. Check out Jim Cramer. March 11th, 08.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Surprise,
okay, just
surprise.
so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that J.P. Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160. It is the fifth biggest bank on Wall Street. It is significant in that it is establishing a price for some of these hard-to-value securities, and as you are well aware, that price is pretty much zero, and that's why you're seeing pain across the street. Now, this also
The ninth best performer year to date is SVB Financial, don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Moffett-Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year, they could come back. Yeah, some of them come back here with the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66% like SVB Financial did last year, it takes it a lot more to recover. After losing 2/3 of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we
So much for SVB.
I just can't get 64, or I can't even get to 44 for that matter. In short, when I see this running GameStop, the responsible move is simply to say, sell, sell, sell. What about AMC? Different situation entirely. GameStop at least has a good balance sheet and actually turned a profit last year. It's just that the stock's overvalued compared to its peers. But AMC, well, if left to its own devices, I think this movie theater chain will mostly run out of money in 2026 when $2.8 billion in debt comes due. They sold some stock yesterday from a plan that allows them to raise capital, but the $250 million they raised just made it easier for them to pay their debts that come due in 2025. If the stock keeps climbing, AMC can sell more stock. That's good. It's how these guys made it through the pandemic to begin with. But that big slug of 2026, it's just way too daunting. In the end, I think it's a dead man walking. You're catching AMC in the walking phase. Sell it before the dead man phase, and you'll do just fine. I just can't get
Take our
64.
stock out of your goddamn mouth.
As usual, Jim Cramer is wrong. AMC has paid off multiple billions of dollars in debt, refinanced all of their 2025 and 2026 debt. As recently as Friday, paid off an additional $40 million of their debts. At this point, the company is good through 2030 and is also now profitable. Gamestop as well, holding billions and billions of dollars in actual cash on hand. You guys all know what happened with Bear Stearns. Lehman Brothers, of course, did the complete opposite of what he said. So much for being a fortress. SVB, with room to run, of course, completely collapsed along with FTX and the rest of that Ponzi scheme that was there. At this point now, we're looking at GameStop warrant day. GameStop warrants were issued on the 3rd, and they are being distributed on the 7th, tomorrow, October 7th. Today, October 6th, GameStop has filed with the New York Stock Exchange and the Securities Exchange Commission the registration, which has been approved by the New York Stock Exchange, and the listing of the warrants on the NYSE. As you can see here from their 8A, 12B, and S3 registration statements, filed October 3rd and October 6th, respectively. Of course, very good news. The warrants to be registered on the New York Stock Exchange has been applied, and no fractional warrants will be issued, which is hilarious because Robinhood, amongst others, have been saying people that Robinhood would be issuing fractional warrants. In your base, no, you're not muted, my friend. We can see you loud and clear. The warrants are supposed to expire in 2026, October 30th, but they can be extended as well. So there is no guarantee that they will expire October 30th, 2026, and it will entitle the holders to purchase at their discretion the cash exercise price of $32 a share. So we're looking at significant potential savings for people if GameStop runs and they're exercising warrants at $32 a share. Check this out. Basically, you're going to receive 1 for every 10 warrants. So when companies like Wealthsimple, here are showing on my screen, Wealthsimple and Robinhood and IBKR and others are saying that holders of GameStop stock will receive 0.1 warrant for every share of GameStop. That is unequivocally and literally false and impossible. They cannot fractionalize the warrants, and they can only issue 1 warrant for every 10 shares of GameStop stock. That is what it's supposed to be. So if you have, for example, 11 shares, you would receive 1 warrant for the first 10, and your 11th share would be paid via cash in lieu. Cash in lieu means that you would receive money in exchange for that 0.1 warrants. Am I right, Wolfie, or am I right?
That's my understanding. I mean,
That
if you're
is
outside
right.
of the US, yeah, if you're in another country with a different broker, it's different, depending on who your broker is, I guess. But yeah.
That is correct. I'd like to welcome our friend Wolfie AMC, our friend AMC for All here as well, who, if you guys have previously seen him on this channel many times, both of these gentlemen, welcome, my friends. Feel free to chime in at any time, though you are not required to do so.
Much appreciated. Thanks for having us.
Absolutely, folks. Absolutely, my friends. But yeah, Robinhood was down for a good portion of this morning, and I'm not buying the bullshit that Robinhood was down due to AMD. I'm just not buying it. The fact is, every single time that something crazy starts to happen with GameStop or AMC or other stocks, Robinhood has major issues, as well as other brokerages, right? We've seen it how many times now, in which they prevent buying, prevent selling, force people to do certain things, have outages. And conveniently, Robinhood hasn't had a single outage, to my knowledge, all year long. But on the day of GameStop warrants, well, they're just people are magically unable to log in. I know, it's fucking hilarious, right? I still don't understand how anybody is actually still using Robinhood, other than the fact that they literally make it easy for people that don't know what they're doing in the stock market by not even showing them any numbers on the chart, which I don't understand how anybody could like that, but to each their own, I guess.
To be fair, we're screaming into the abyss for the most part, but you've got millions that go through Robinhood that have got no idea of any of the stuff that we all know. They got no idea the buy button was away, the lies that they told when, Vlad from Bulgaria sat there at Congress, and a long list of other things. So they're just putting their money in, they're doing what they're doing, they like the site for whatever reason, but till they get burned.
Well, it's cute and it's pretty and it's flashy and it's super simple. It's easy. It's for the people, and that's how they suckered everybody into it. I have one share of AMC on Robinhood that
Smart.
I got I got the free shares for signing up for Robinhood way back in the day, way before my AMC, and I just ended up selling everything and just bought into AMC. So that's that's what's happening there. So in case there's some kind of lawsuit, I've got a little foothold on there, so I'm ready just in case.
You just want to be able to sue the piss out of them, don't you?
That's right. I just want to be part of that class action and have my name on
I've got a strong feeling you're going to get your chance.
it.
We know how bad they are, but unfortunately, there's too many innocents out there that they haven't been burnt yet. And when they're burnt, they're going to be like many, many others, literally millions that are going to be screaming out, well, it happened to me and you ignored us, or you didn't hear us, or you didn't get to see us, or you didn't pay attention, or we tried to tell you. I mean, how many? We've been here 4 or 5 years, most of us. It's nice to get new people here. It's nice to get new people join, and they'll go through the same, learning curve we all did initially, whether it's on Twitter or in Discords. But if you're here for the right reasons, and you've bought the stock and you're finding out things that we've known for 4 or 5 years, we'll remind you. Darren Saunders knew things back in 2001 and 2 when they started putting that film together, and none of us knew that then. So it's been around forever. If we don't stop it, there's going to be another wave and another wave and another wave. And the way they do it, people like Robinhood. I think everything in the market has to be set up in such a way for different problems, different scenarios. One gets in trouble, transfer them over there. The SEC are coming in this morning, transfer that over there. Can you send me over some shares? They're coming in and I'm going to get margin called if you don't give me them, so I've got them in my account. Transfer them back. I wouldn't put anything past them because I've been here long enough, watched long enough, done enough DD to realise there is one serious problem within the stock markets, a cancer in the market that's been allowed to flourish. So we have to win, because there'll be another wave. There'll be another Marcel. There'll be another Butcher of Wall Street in another 10 years' time, 15 years' time, 30 years' time, until somebody stops it. And I honestly think somebody said many moon ago, we are the cure. I'm sure they meant it. I know they meant it because it was me that said it. So
Amen to that.
we got to keep going. We got no choice. Kramer's at a world wheel. I don't see why we wouldn't.
People keep asking me, like, how is it that GameStop stock is so suppressed? How is that AMC stock and all these others? Why aren't they worth more if GameStop literally has like $8 billion in cash on hand and Bitcoin and zero debt, and all these other things? Look at my screen. The CFTC has ordered an institution by the name of Shinhan Securities to pay a slap on the wrist penalty for wash sales. And in case you're unaware, wash sales basically means that one company is trading it from between two companies are trading it basically back and forth. A Shinhan trader entered near simultaneous bids and offers for the same quantities of the same futures contracts for trading accounts that had the same beneficial owner to enhance the likelihood that his buy and sell orders would be filled at the same or similar price, which offset trades upon execution. In doing so, he negated the risk or price competition incidental to an open and competitive marketplace. This is something that is not just speculation or something that happens every now and then in the market. It happens over and over again every single day. The manipulation, the spoofing, the wash sales happen on many stocks, particularly those that have heavy short interest. And the ones that we've seen time and time again have massive increases in price, like GameStop, like AMC, like SLV, etc. When we're talking 500%, 1,000%, 1,500%, 2,000% gains in the matter of a few days. There's a reason that these firms want to manipulate these stocks, because they are so over leveraged that it has collapsed so many firms like Tiger Capital, Melvin Capital, Archegos, Credit Suisse. And we're talking not just family offices, but hedge funds, banks, some of the world's largest banks. Credit Suisse, for example, had to be taken over by UBS, and UBS wouldn't even agree to take them for pennies on the dollar without getting an $8 billion guaranteed bailout from the Swiss government. Is that fucking hilarious or what?
And we have haters coming in and telling us we're losing. I mean, how are they all going out of business
Correct.
then? I mean,
Correct.
you know.
Why did hundreds of hedge funds and family offices go bankrupt? And we know that they have not closed out their positions because the federal government has told us that the SEC's report on GameStop and AMC found that in front of the House Financial Committee, these firms attested, the SEC attested that they have not closed their short positions, and short covering has not actually occurred. So all of these swaps and derivatives that are completely toxic, that have taken out firms like the ones I already mentioned, are still out there. They're just being rolled. They're kicking the can. They're failing to deliver. And it's something that we're going to deal with in perpetuity until something breaks.
Derivatives, Marcel, I just sent you a link. The U.S. Bank derivatives, and over on the right, you can have the historical rankings. And if you click just at the end of 2024, so it's 12/31/24, and look at the derivatives of the banks, and then go back to the most recent posting, there's literally another 30 trillion in derivatives in like a 6-month period, basically.
Absolutely massive amount of money.
The house of cards is going to come down. It is an immense amount of derivatives.
Some people like to pretend like this isn't a big deal because it's total notional value. But at the end of the day, all of this is rehypothecations and reborrowing and trading of the same packaged dog shit wrapped in cat shit, as the movie The Big Short likes to say, that is at risk of destroying potentially the entire financial system. JP Morgan Chase Bank alone has more in derivatives notional value than the entire GDP of the entire world combined.
Of Earth. Yeah.
Of the entire Earth. Exactly, the entire planet fucking Earth. And they want to pretend like it's not a big deal because they are netting them. They are bilaterally netting them, which means basically offsetting one trade against another. What would happen to the financial system and all of these firms if all of these trades are bilaterally netted and collapse? It's like a domino effect. It is a never-ending domino effect that has extreme amounts of risk. That's why we saw all those dozens of firms, like I mentioned, Tiger Capital, Melvin Capital, Archegos, Credit Suisse, and so on, and to the point where UBS literally wouldn't buy them for a penny on the dollar without getting that $8 billion guaranteed bailout from the Swiss government in writing, because they know it's going to happen. And they didn't say if, but they says when we realize these billions of dollars in losses from closing out these toxic derivatives, we demand up to $8 billion in bailouts from the Swiss government. And the Swiss government signed it, sealed, and delivered in order to let them buy it. Now we're seeing UBS, basically their margin requirements have been getting pushed higher and higher every single month since this has happened. And I don't think that there's just a coincidence in the slightest.
And they're allowed to hide it. They're allowed to lock it under. It's like the JFK assassination. Oh no, it's too. Can't be dealing with that. Can't have that out in the public. So we're just going to hide that for 50 years. These are the experts on the bastard planet. These are like the financial institutions. These are the ones that we all have to rely on. These are the ones that are preventing us from losing our homes. You know, this ain't ninja loan time, but this is 2008 on steroids, and we've said it for 5 years. People want to start looking. How are they doing it? Well, I don't know who it was, but good evening, everybody in the chat. We do see you, and I'm reading the comments while Boss is chatting everyone else. Somebody put a comment in there. Unfortunately, I didn't take note of your name. So if you hear me say this and you know it was you, chat your name up and I can give you a shout. How does Robinhood open at an IPO, go tanking down, and then over time come back out the other side? Because it has a use to Wall Street. If there wasn't a use
Oh,
for Wall
exactly.
Street, it would have gone belly up. And people want to come in now because they're now investors. So you might have bought when Robinhood went right to the bottom and it's now gone up 10x. We're not here for 10x. We're here for 10,000x. We're not buying stock like most people tend to buy stock. Our reasoning behind it, our DD behind it, our belief behind it, our 5 years of being here, being told we're wrong and people laughing, telling us every day for 5 years, our companies will go bankrupt. Well, GME's still in business and thriving, AMC's still in business and thriving, and Kramer's still telling everybody who doesn't know what's going on, so that you don't look, it's all going bankrupt. But they've got trillions of dollars hidden here, there, and everywhere. And when it becomes so big that it's becoming public, they just hide it. They just decide that you're not going to see or understand how big it was, who was involved, who were the players. So they'll hide it for 50 years. And these are the biggest banks. These are meant to be the experts. How can experts get this stuff so far wrong? Same as
Well, they're experts
2008.
at robbing us, is what it is. They're
Well, without a doubt.
experts at stealing from us.
But they're experts at setting up the game with the
Mm-hmm.
rules and the regulators and the enforcers that don't do nothing for us because they're there protecting them, which is why January 28th in 2021, they wavered in the DTC the 9 billion in margin calls. That ain't us saying that. That's stuff that they've actually declared. And then the real worry, which nobody really gets into, it's not what we're told we got to look at. Because they told us 9 billion, but in 2008, they told us it was $3 trillion. It was only an independent in 2019 who told us it was 29 trillion. That wasn't, and we're sitting here and Boss has just told us all there's 30 trillion there alone. The derivatives market, Buffett said in 2001, run a glorious 2A4 side paper, it's a ticking atomic bomb in the market. Do you think they all got a conscience? They suddenly stopped? No, did they? Hell. But they're all siphoning money out. They're all buying art and funds and they're all hiding it so that when it all goes to shit, they ain't got nothing to give. They're going to live their life the way they always have. They'll still be flying around in their fucking planes. But you're going to be losing your house, your jobs. You're going to be wondering, what the fuck happened there? Well, these greedy bastards have been lying here forever, making us look like we're the idiots, we're the dumb money, and we're telling you the only reason they get away with doing what they're doing is because they bullshit you, you buy it because you're busy, and then you ignore the very people that have got no other interest other than just to get you to look. And if you look, make your own mind up. You might not agree with any of us, fine. But our job is to make you look. Because if everybody looked, Trump wouldn't be doing things in the background. He'd have to be doing them blatantly up front because you'd be up in arms. That's your grandkids' money. Whether you know it or not or understand it, that's your great-great-grandkids' money. That 30 trillion debt, he said, write a check in crypto. Well, he better, because when this comes along, I think that's why he's having to do what he's doing in America at the moment. He's got to steady the ship. He's got to make sure everything's as strong as it can be. He's got to get all the investment into the United States because, mark my words, that man knows how big a problem this is. And that man knows there's 5 to 10 million of us that ain't fucking wrong. That man knows there's people in that market that are using it as like free money. And if they can't get a share, they don't give a shit. They make one up and sell it. And that goes in your 401k and that goes in my investments. And then they lie about the company to bankrupt it, which is why they always make the money. This time round, they can't bankrupt the companies. They've had 5 years. They've still got control over everything, at least publicly. There's nothing stopped. There's nothing changed. 2008, 1929. Nothing ever changed. The rich get richer and we keep losing everything. And the reason that is because you don't pay attention. We've become quiet as a community because you never paid attention. We've got everything against us and nobody's coming to save us and we don't give a fuck because our shares are still in our account and Kenny Griffin can't get them and they can push the boat all they want. Sooner or later, that boat's coming home. And that's when we all get paid out. And then we'll say, we're really sorry that happened to you because we tried and tried and tried to tell you, but you were busy. Fucked up world. Fuck
I,
Robinhood.
I think Wolfie, what you're saying about they're buying art, they're buying property, they're buying like tangible assets. Look at gold and silver right now. Gold is the
Amen.
highest. It's about to hit $4,000 an ounce.
1,000. It's insane. Insane. People
Silver
wouldn't
is
believe
at
it.
48.69. That is almost all-time highs. Both are up massively today. Why is that all happening? Like, ask yourself, why is that normal for gold and silver to go up this much as they have over the
Well, to
last
be honest,
period of time? That's not
all in
normal.
it, I think this talk about BRICS and everything else going on around the world, the US dollar being the main currency around the world, there was an awful lot of moving parts going on. Now, ordinarily, I would answer that question that there's a market crash either like literally days, weeks away, or there's some other issue. Because gold and silver invariably goes up since the 70s, and in my opinion, since the 70s, and they took it away being restricted or restrictive of the US dollar. So you couldn't keep printing the US dollar when it was linked to gold. Take gold away and print all the money you want. That's why Ron Paul was talking about as a problem with the Fed. So you're now in a position where ordinarily you'd say for gold and silver to hit that price, it does the opposite of the market. So when the market's really weak or people are really scared, to drag the money out of the market and where they're going to put it. Well, gold and
Mhm.
silver is one of them areas. So you'd think, all right, is there a crash? But gold's been going up for quite a while now. So could there be something else going on? Well, yeah. One of the things that's going on is what we've been screaming. Marcel's been trying to educate, what you've been chatting to your followers and listeners, what we've all been doing. Because they're trying to get out of the hole that they dug. And it isn't
Mhm.
just GME and AMC and MMTLP it's literally everything. It's every area of finance they have milked and milked and milked. And where they were allowed to be able to get away with leverage and overexposed, they've done it. Oh, they've done it. But now it's getting to a position like bosses highlighted with the banks that were running into trouble. Do you remember, what was it, a year ago or so when we had 2 or 3 little banks? Well,
Mhm.
that has a knock-on effect to the other banks because they're all in it together. They might not all be shorting, naked shorting, spoofing, God knows what else. They might not all be shorting gold and silver, but they're all involved and tied in together. That's why when 2008 happened, because we're told the market crashed in the mortgages in America, we had 12 years of austerity in the UK because all the banks are tied into it. And when there's free money, they're greedy as fuck and they all go in. And then they come on our TV, supposedly our TV, to tell us how clever they are and how much money they've made. And then when it all goes to tits, they've all disappeared with all the money and we step in with a bank. We're now the bank. Hang on a
Yeah.
minute, you've robbed us blind, but we're now the bank. You're coming to us. We've got to pay more in tax. We've got to go without services because we've now got to bail you out so that you can do it again. I mean, fuck me. If people don't get angry this time, you deserve to eat bugs.
They're gonna eat the bugs, all right. If you guys remember, this one here is for cash money. My good friend, our good friend, who has recently passed away, Chase Kirkham is his name. He was a huge proponent of gold and silver and really pushed me hard to look into it more when we were trading at $17 an ounce for silver. when gold was trading 3K or sub 3K, and really helped a lot of us in the community understand what is going on with the rehypothecations of precious metals and just how great of an investment tangible gold and silver are.
Mm-hmm.
And so far this year, over the last 1 year and year to date, they are outperforming the stock market by leaps and bounds. They are outperforming the S&P, they're outperforming the NASDAQ. We're looking at a 62% gain in silver year to date alone. When we were talking about this for the first time, talking about diversification for people and how it's important to own a variety of different assets, it was still trading in the $17, $18 an ounce range. And I know a lot of people here and throughout the communities, such as yourself, you did your own homework, you did your own due diligence, you didn't take our advice, but you listened to what we said, you went out and did your own homework and realized, hey, this makes perfect sense. Owning these actual coins could potentially have a lot of potential for the future, regardless of what happens with the stock market, especially with everything we've been seeing with inflation, with society, with the problems we've been seeing recently. And I know a lot of people so far have more than doubled their money, increased their money 100%, 150% so far over the last several years by investing in things like silver and gold. And at the same time, some of those people bought other things in the market, bonds, stocks, even meme stocks, which so far, some of them have done very well. Others have not done amazingly well. But at the end of the day, we know that these firms have not closed out their positions. Remember, when GameStop and AMC were made position close only, meaning you couldn't buy them on Robinhood, Webull, IBKR, etc., they also did that to the silver ETF SLV. This would not have happened had it not been for all the rehypothecation that's occurred in those stocks. We're already seeing a short squeeze in precious metals like silver, gold, palladium, lithium, etc. in a lot of these. And that is kind of a very similar thing that I would expect to see in other stocks, particularly heavily shorted equities like GameStop and AMC. It's unfortunate to me when some people say, well, it's not unfortunate to me, but I believe it's unfortunate when some people say, oh, I've lost this much money in GameStop, or I've lost X amount of money in AMC, or I wish I wouldn't have bought it. And what I think to myself is, why did you invest money that you don't have? Why would you over leverage yourself if you weren't willing to potentially lose it all? Because it doesn't matter what you're investing in. Anything gives massive potential for losses. Real estate, stocks, bonds, even treasury bills. And if you don't have the risk tolerance, you probably shouldn't be investing that money. And that's exactly what I tell people all the time. For example, if you haven't sold, you haven't lost anything. If the stock ran up to massive digits and you didn't sell GameStop at $500 a share, you didn't make anything. And if you haven't sold GameStop at $26 a share, you haven't lost anything. The same could be said for AMC stock. That is unlike these banks, who so far have lost over $250 million after reportedly allowing a firm called BlackBrook, not BlackRock, BlackBrook, to place a naked short of $2.6 billion to bet against United States Treasuries. Now, this occurred before the Archegos collapse in 2020 of $10 billion, by the way. And now the liquidators of BlackBrook Asset Management are suing the management there of BlackBrook for these $250 million in losses. Guys, they gave them, these banks are so fucking greedy that they gave them 11,000 times leverage. 11,000% leverage. They had 140. I know, man. I don't blame you for laughing. $144,000 in net assets. And these banks, the ones we were just talking about here, right, in these derivatives, these toxic derivatives, Citibank, JP Morgan, Goldman Sachs, Citigroup gave them 11,000 times leverage to naked short sell domestic government bonds, which is, of course, banned by the European Union and the United Kingdom Financial Conduct offices. And Bloomberg is now reporting that Citigroup and MUFG were amongst the banks who executed that bet, which, of course, backfired when there was a market rush into U.S. treasuries and silver and gold and such because of the COVID fears and the inflation fears. And, of course, that company collapsed in March of 2020. But even still now, 5 years later, they're dealing with the fallout of these $250 million in losses for this $2.6 billion short of U.S. treasuries with 11,000% leverage against their $144,000 in net assets.
So real quick,
Absolutely. Jump in.
11,000%.
11,000 times
just for
leverage.
Everybody listening to kind of get an idea to like grasp what that really means. If you had 10 grand in cash and you put it in the bank and they used it as collateral, 10 grand, used it as collateral, they would let you play with 110 million.
Yeah, man.
On your 10 grand
That's
security.
Correct.
It's mental.
It's mental.
Absolutely fucking mental.
That's why these derivatives are so important, right?
When you say it, Boss, you say like, oh, there was 11,000% on leverage and that, and you've eloquently explained how much that is in millions. But when they lose it, it isn't the government take that bank and it becomes part of the United States, or if it's in Europe, part of Europe, or that bank's just lost a shit ton of money, and that money's got to be paid back. So when you're paying your tax, when you're working, you're paying tax on this and tax on that and tax on this and tax on that. When you're having to pay for a house that you bought 20 years ago and you thankfully live into a ripe old age and you're still paying money into, your state because you own this house that you stopped paying for 20. That's why we're doing it. All these things that they're set up, the changes to your pension, the amount of tax you pay, the wages you get, that you need two people in going out of work, it's because they've had it off. It's like two different worlds. They got a party that we're not part of. Someone, I can't remember the comedians, they said, it's a club, you're not part of it. It's worse than that.
George Carlin.
We're the ones that are sitting on the outside, getting up every day doing what we're doing. And if we lose everything. If they lose, we lose everything, and they carry on. It's like it's so one-sided. It's just, how do people not understand the reason that we pay what we do? If you go to work, look at what you pay out of what you've earned, having gone to work, and then realise that that's subsidising all these issues that bosses talked about that we're raising. Because when they fuck up, they don't lose. We lose. We pay it one way or another, whether it's taxes or austerity or losing our house, banks not loaning us money so we can't pay the mortgage or pay for the car. They'll come and collect all of that. It's a rug sweep. But it's done because they don't have to care, because they are not the ones paying it back. They can have 11,000% leverage because when it goes wrong, they're not the ones paying it back. But they don't come out and tell you on mainstream media when they wheel these fucking suits out, these experts, these brilliant people, and say, yeah, we made $2 billion this year, that it was on 11,000% fucking leverage. They ain't got no bloody money because they bought the yacht, the planes, they're enjoying the life. They're relying on you paying it. Fuckers. Honestly.
Holy fuck. Yeah, a law professor at Cornell said that even though Blackbrook did not leave a massive crater like Archegos that destroyed Credit Suisse and so on, and still has legacy, these legacy costs for UBS through their toxic derivatives, that was a canary in the coal mine for the deeper issues at the banks that at the time managed the counterparty risk. That is a big part of why these bank derivatives are such a big deal. And again, people try to pretend like, oh, it's notional value, it's not a problem. If it wasn't a problem, why are they still trying to sue over this $250 million in losses, which they allowed a firm to take 11,000% leverage on?
And just confirm, Who's the people, boss, that say, "Oh, it's no big deal. It's just part of the market. It's too complicated for you people to understand. You riffraff, you workers, you don't understand." Who's the people that actually tell the world, us, that it's not a big deal? This is all part of our business. We know what we're doing.
Of
The
course,
same
it's
fucking people using
the bankers.
11,000%.
Yep.
Leverage.
The hedge fund managers, the bankers, smart money, who wants to step on your
Gasparino.
neck. Gasparini, that's right. Jim Cramer, these folks.
It's like going into a casino. These people, they're like sitting at a casino. You come into a casino, there's a big crowd round them. They got the fancy suit, the watch. They're bringing all the drinks over. Everyone's laughing, enjoying it, and all that. They're splashing the cash around and all that. It's your fucking money. You're having to sip lemonade in a corner because it's your money that he's doing it with. I mean, that's what we're actually talking about. That's what they're actually doing. And then when they get up and they're bored of, wasting your money gambling on a roulette or playing poker, then they go up and do the oars and the hookers, and you're paying. And then he gets in his car with his driver, and you're paying. And he walks into his mansion that we paid for. I mean, there's no ifs or buts. They don't get rich because they're smart people. They don't get rich because they've got honour. They don't get rich because they care about any of us. They get rich because they're allowed to get away with robbing us fucking blind.
With robbing the
They
hood.
are literally making the rule book up as they go along, and when we call them out on it, they change the freaking rule. It's like, oh.
You're not kidding, dude. As a matter of fact, they're robbing us fucking blind. I'm literally looking at this fine that FINRA put on Interactive Brokers, IBKR, of $650,000 slap on the wrist. For a period of 5+ years, IBKR failed to exercise due diligence before approving customer accounts that were not managed by third parties to trade options. That means they let people that had no idea what they were doing trade options and lose, obviously, tens of millions, maybe even hundreds of millions of dollars out of their own greed. Because the more options you trade, the more money that these brokerages make. They want to pretend like you are their customer, but you're not. You're the fucking product. They are using you. Commission-free trades don't exist. You still fucking pay. You pay so much more, in fact, that the SEC found that Robinhood provided prices so bad that even accounting to the savings from not paying a commission, their users lost over $34.1 million more than if you had just paid a few pennies or a few bucks up front for your trade, because your buy prices and your sell prices are complete fucking dog shit. At the same time,
We're their bank.
We're the fucking, they're taking the money from us.
We're their bank.
Exactly.
And we're the only bank on the planet you don't have to pay back. We're their frigging bank. They can do whatever they want, buy whatever they want, spend whatever they want, waste it, gamble it, lose it, do whatever they want, crush markets, they can do whatever the hell they want.
I'm just going to say this, that the whole free trades are free. Trades are free. They're not, first off. But if you're such a fucking cheap ass that you can't spend a few bucks to execute a trade, or you're not making enough money to cover a few bucks on a trade,
why the fuck
you
are you
shouldn't
trading?
be playing in the market. Yeah. If a few dollars to execute a trade is your biggest concern, you're not doing it right.
Correct. Absolutely right.
Gold isn't going up. Currency is taking a shit. Gold doesn't change. I can't hedge. Chummers, go back to Kenny and tell him we're not that fucking stupid. Some of us ain't just been born, We've been watching for 30, 40 years. Gold and silver goes up when the market's in trouble. And the only reason it's been held down is because of the US dollar. And they broke away from the US dollar in the 70s because it was too restrictive on it. So you couldn't print the US dollar when it was linked to gold. And then in order to stop gold going up, so people didn't lose faith in the US dollar, they started shorting it. And they've shorted the shit out of it forever. That's part of the reason why gold's starting to go up. That and the fact every country seems to be buying it around the world for the last 10 years. Cash money was mentioned earlier. It's about time I give him flowers publicly. I once said,
rest in peace, brother,
a long time ago, that we all sing the praises. Cassandra, Cash let me speak with his mum, who explained that Cassandra, which is Burry on Twitter, the name is because it was the guy trying to warn everyone leading up to the 1929 crash, and nobody listened. Well, if you listened to Cash, you'd have made a lot more money than you'd have lost. A shit ton more than that if you listened to Cash and never listened to Kramer. So I always said Burry was wrong more times than he was right. But when he was right big. That's Diamond Andy community. When we're right big. But Cash was right more often than he was wrong. And that man educated us and managed to share information with us so that we could read and understand why gold's hitting its all-time high. And it isn't because the US dollar's trash. So I don't know who you are, who sent you, but you need to go back to him and say, Wolfie's back, and he told me to fuck off.
We are this close, ladies and gentlemen, to an all-time high on gold of $4,000 an ounce. And as a matter of fact, right now, I'm glad you mentioned it. Mrs. Laurel Kirkham, Chase Kirkham, our friend Cash Money, his mother is here in the chat right now. She's chatting with us, and I just want to give a huge shout out to the Kirkham family and say we love you. We miss Chase just as much as you guys do. Every day.
Much love and respect to all the family. It was a hard pill for you, I'm sure. I don't know how long it will ever take, if at all. But just remember, we won't ever forget him, and it's been a tough pill for us, and we weren't blessed with knowing him his whole life the way that yous all did. But trust me, we think of him often, we mention him often. We need to see a few burrs in the chat, in the tank. You raised a really good lad there, and he had a lot of heart, and he was looking after people, and he had more excuses to be a bastard, an horrible bastard, and he chose not to be. That reflects well on you and the family and all the loved ones around him. He came in and tried to help people. He had no cause to, he didn't need to, but he chose to, and that to me speaks volumes of a man. I do miss him.
And he was right again. Look at gold and silver go. Look at them go. Silver, the all-time high is silver. I just posted this a little while ago. Let me grab it. It's $49.45 an ounce. And that was during the squeeze in 1980. And then peaked again in 2011 to $49.21. And silver right now is getting right up on $49. It is
We're about to
very
hit it
close to
again.
$49.
Yep, 50
Yeah,
cents off.
it's about to hit all-time highs. It's not far away at this point.
Mm-hmm.
A very small percentage away from being all-time highs. Just like Wolfie was saying too. There is this tells you, because the market is not struggling. The dollar, normally the market struggles, so people escape out and go into a safe haven. Safe havens now, there's multiple safe havens now. A lot of people view crypto as a safe haven, and look at
There's
crypto
3 or
going
4.
right now too.
Yeah, I mean, that changes because there's 3 or 4 trillion in the crypto market. It was never there 15 years ago, and gold weren't running around at these prices. And it certainly never hit all-time highs when the market was all-time high as well. Everything's all-time high, and it's that leverage that Boss was talking about is why I believe it's all-time high. The wheels come off ages ago. We just ain't seen the crash.
It's careening down the hill as we speak.
Yeah. And they 11% leverage, that just gives them another day. Remember Kenny? Fighting for another day, where can they borrow money? Where can they get money? Where can they get a breather? Where do we go? We go and pay through the nose. That's what we do. These fuckers have been lying forever, and we've had good people come and go. We've lost good people. It's painful to know that I actually said, don't remember the people getting rich. Remember the people that didn't. And you see that 11,000%, cash has gone. Nana Ape recently. Stonk Vision. There's too many to mention.
Yep.
There's people that have gone. Vision. I never knew.
Yep.
Yeah, I didn't know.
Cash Money.
I didn't know everybody that was in 5 to 10 million. None of us do. But we've all met people. We've all got close to people. We've made friends. We're still friends. We're still fighting. And we've got to sit here while the SEC does nothing. We've got to sit here while the regulators don't regulate and while the rule enforcers ain't enforcing the rules. And we're screaming from the rooftops. And we're losing good people that should have woke up and seen that day of the new dawn. They should have seen that price rising. They should have been able to see that they were correct. They should have been able to help all their family and their community like they were planning to do. They should have been able to fucking breathe. But because of the way it's all set up and the greedy bastards, we're out here screaming into the abyss, and one by one we're losing people. And we're not losing people that shouldn't have been paid off or correct. They shouldn't have been able to go home and spoil their mum. They should have been able to breathe and look after their family and communities, and they'll never get the chance. So you better remember them. Because you sure as hell hedge funds ain't gonna, and the banks won't. The SEC will never mention them. Fucked up.
You know what? A big reason why we talk about options so much on this channel is because they are obviously very risky. And with a lot of risk comes the potential for massive reward. And if you look on my screen, you could see that the percentage change on some of the advanced micro device, AMD stock, contracts, call options specifically. Some people were seeing gains, percentage gains of 32,000%, 46,000%, 64,900% on some of these contracts, these call contracts for AMD. So even still, when you see stock run up 33%, know that 33% is a nice little run. But the stock itself moving 33% could potentially catapult call contracts tens of thousands of percentages. So think of what even a small gamble, again, I'm not trying to give you advice or telling you to gamble, but think of what a small gamble could potentially mean if you see these call contracts increase this much. Now, I know some of you, many of you, are invested in stocks that have these sorts of potentials. For example, since we were talking about AMC just moments ago, I still remember clearly in June of 2021 when my call contracts went up by 6,000, 7,000%. I still remember in 2024 when my call contracts went up several thousand%. There are good days and there are bad days. And people, some people, are more than willing to put up with some bad days, right, in which a stock is negative for an extended period of time, weeks, months, years, in order to capitalize on those days and hours in which there are hundreds and thousands of percentage point movements. You could keep your, 44% or 38% gains on the S&P 500. I could give a fuck all about that. They're fine if you're close to retirement, if you are potentially very conservative, and as a hedge, right? As an actual diversification of funds. But for many people out there, I think that they would much rather stay diversified, but also keep some things in riskier assets. Hold some safer assets. Hold some things with massive potential. Stocks, bonds, and others that have incredible tangible value. Food, real estate, silver, gold, etc. And then some others, even still, that have high risk, but incredibly high reward factor. Again, 65,000% gain on some of these AMD call contracts. Think about what $100 in this call would have done for you. Or, let's see, the bid now is at 655. That means that 65,000% less would be, what's that, $10 a call? $100 a call? What $100 invested in that stock could have potentially done for you? Instead of spending it on Starbucks or dropping it on Netflix, pedophile supporting streaming services. It could have potentially made people a lot of money, life-changing money. And that same thing applies to options contracts on many, many other stocks, including AMD and AMC and SLV and GME and such. I know a lot of you out there are waiting for these warrants, eagerly awaiting them. And I think I'm very excited to see what's going to happen. Not just, not just on the 7th when they're being distributed by the DTC, but what happens with T+35, with the failures to deliver on it. See what happens in 2 months, in 3 months, and 6 months, and 12 months as it approaches the expiration date. And if the stock, when the stock does start to move, especially if it starts to get significantly higher, and people start realizing that exercising their contracts is going to save them a bunch of money, instead of buying it for $60 a share, $80 a share, $100 a share, they can exercise their calls for $30 bucks a share, $32 a share. That's a lot of shares that need to be fetched. And even more so, GameStop has the ability to issue new shares. So they may not do that immediately, but there's a potential that if the stock price does start to go insanely high, they could potentially make billions and billions of dollars by selling more shares on the open market in the future if this thing really starts to go crazy. Granted, that is an opportunity for dilution for some retail shareholders, so I urge caution and profit taking when appropriate. $39.86 on gold, literally $13 and change from $4,000 an ounce. What a change.
I'm quite excited that Ryan Cohen and Roy and Kitty are going to get more people exercising than all the schools in the land. We're going to see the effect of options. We might not buy it, we might not be used to it, but I think we're going to see quite a drastic. It's going to be volatile, to say the least, once people start exercising them.
You know what? Since we're talking about brokerages, I want to take 30 seconds to say Lit Exchange has secured a reservation of a NASDAQ ticker, LTX. Lit Exchange, the upcoming stock and crypto brokerage, does plan to IPO in the next several years here. And if you're not averse to risk, there is, of course, a lot of risk and an incredible amount of potential with Lit Exchange, particularly since this is the first time in the history of the world that any stock or crypto brokerage has ever given you, the non-accredited retail investor, that means not rich people, but regular everyday folks, the opportunity to invest in the company and own equity in the company and own shares in the company and receive perks and receive benefits that are exclusive to this round only, that will never again be available for the purposes of getting in on the ground floor. So then when the company does IPO as planned in the future, in the next few years, you will then receive shares on our LTX stock ticker, at which point you could sell at any point after we IPO. It also gives people the option to buy more shares prior to IPO, called first buyer's rights, should you choose to do so at the IPO price. So that's something that we've been working on for the last 4 years. We have a multitude of patents already pending with the United States Patent Offices, design patents and utility patents as well for the functionality of the company. So far, over $1 million has been raised organically by people finding out about this on streams, just like you are right at this very moment. So I will leave you with that. Remember, Vlad Tenev from Robinhood, continuously trying to gaslight retail investors with his opinion pieces on the Wall Street Journal, with his little displays in Cannes, in France, on the beach, trying to tokenize anything and everything for the sole purpose of running up the value of their special purpose acquisition companies, trying to make as much money as they can on their particular company right now, which is good for them, absolutely terrible for the retail investor. You buy tokenized securities of OpenAI, which is a private company. You don't actually own a fucking single share of OpenAI. If you buy tokenized securities of SpaceX, you don't own a single share of SpaceX. You own a toxic derivative with absolutely zero underlying assets or relation to the company itself. This has been publicly stated by Elon Musk. It has been openly stated and warned against by OpenAI, in which these firms and companies, Elon and OpenAI, have stated, we have no affiliation with Robinhood. This is not our security. We are a private company. You cannot buy our company. But Robinhood wants to tokenize anything and everything so that retail investors, in an uneducated manner, can get exposure to the valuations of those companies and go out there and say, well, if the price of OpenAI goes up, then I'm going to make money. Well, guess what? If the price of OpenAI is in an AI bubble, then you also have the opportunity to lose a lot of money. And I don't know if you guys have looked at the overvaluation of some of these firms like OpenAI, but it's kind of a big deal. They're extremely overvalued, and they would have to go up a lot more than they would have to go down in order for people to see a complete loss of every dollar that they put into it. Let's put it that way. So use your own due diligence, do your own homework. Tokenization is not all that you think it is. It's appropriate in certain times and certain places. We already touched on the wash sales that are happening time and time again. The CFTC ordering companies to pay penalties for that, for other firms committing wash sales, which means illegally trading shares of stock back and forth. Merrill Lynch is suing Charles Schwab and a group of financial advisors that oversaw almost $130 billion in assets for poaching their business advisors and support staff. The things that these firms, these smart money firms, state never happens is happening time and time again. The SFC is seeking an $82 million asset freeze order against manipulators of smart tech shares on the market, against these things that people like Jim Cramer and Charles Gasparino tell you never actually happens, is of course happening over and over again. So keep that in mind the next time you're looking at a stock price and go, wow, that sounds incredibly overvalued. How did Robinhood get to be so expensive? How is OpenAI, which is, losing so much money and is raising hundreds of billions of dollars and spending it like it's going out of style, a private company, become so overvalued? And now Robinhood wants to sell me shares of nothing to pretend that I have some sort of OpenAI exposure. Maybe that's not a great idea. Maybe Robinhood stock's not a great idea. Maybe some of these other firms that are incredibly undervalued are in fact deep fucking value stocks. What do you guys think?
Yeah, I'm with you. I think 5 to 10 million apes are. We've all been here 5 years now where they've told us it's going bankrupt, it's going bankrupt. We've been here 5 years and understand they've got the SEC, they've got spoofing, naked shorting and everything else. And our companies haven't gone bankrupt. And for the first time ever, it's you and me and everybody else in the community that have bought and held and bought and held and bought and held and never left. They can't. How is it they've got everything going for them, and the one thing they need they can't do, and that's bankrupt our companies?
They
Everyone
can't
wants
do
to
it.
tell me they're unbeatable, but we're still here and they haven't won because they can't do the one thing they've been able to do every time they've gone after a company. And that's because of you, me, and everybody else that just will not give them up. They're in my account, you're not having them. You want them, you pay my price.
Absolutely
Cold
right.
dead fingers. No, it's
Blockbuster, Toys R Us, right?
Yeah,
The list goes on.
yeah. For decades.
Circuit City,
But
Radio
that tells
Shack.
you all you need to know. That tells you all you need to know. They can't do what they said they set out to do, which was to bankrupt AMC and GME. They can't do it.
No.
And as a matter of fact, that short thesis is now completely and utterly dead.
Mm.
GameStop
It
has
is.
so much fucking cash on hand, it's retarded. It's crazy. It's
Yeah, it
crazy
is.
how much cash they have on hand. They are going nowheres. AMC has eliminated so much debt and is on the verge of being cash flow positive. Like all the everything that all the steps forward and the box office record, all these things, the short thesis is absolutely crushed and destroyed. It doesn't exist anymore. So now it's just the reckoning. Because they can't escape. We have our foot on their necks, and I'll be damned if I'm not moving that foot until they whip out a wad of cash.
I'm not
And it's gonna
fucking
be a
selling.
big wad of cash. I don't
My
want
Billions.
I don't want $20. I want a whole lot more than that.
My shares are in my will. If I snuff it,
If I snuff it.
don't worry.
Fucking
They're in
Wolfie.
safe hands. I've educated my kids on why it's important to hold them, and they've also got their own shares. So if we've been going to a cinema for 100 years. People always love playing games. GME's in a transitional period where it will be expanding in all different areas. At the moment, it's taking care of business, got a shit ton of cash. That's the sort of cash that Kenny Griffin would like, because he owes a lot more than he's got, and GME don't owe anywhere near as much as it's got. So my money's always been on GME, and my money's always been on AMC. And as great as the CEOs are, and as great it is now to see the companies thriving, it's yous. It's literally everyone in that chat. It's the bosses of the world. It's yourself. It's looking at my kids and my family when this has been 5 years of me saying it'll happen, and it hasn't. And they don't know what I know. And I have to always remember that when they're laughing or they're joking or trying to make light of it. When I come home knackered from work and it's like bloody hell, they go, it's a shame we ain't rich. We use it as humour in this house. But I do get the fact they think it's never going to happen. And they're allowed to think that. And the enemy that we fight, they're allowed to tell us we're wrong. But my company isn't bankrupt, and you can't make it bankrupt. And sooner or later, you're going to have to pay me what I want for my shares. Because if you don't, my kids will say the same thing to you when I'm no longer on this earth. So we can last as long as we like. We can stay retarded longer than they can stay sober.
You're damn right you can.
The truth. It was more than a saying, it's the actual truth. And they have to worry about. We've spent 5 years understanding what they do, how they do it, and how they get away with it. Who helps them, who assists them, and who turns a blind eye. We haven't spoke anywhere near as much about the shit that they got to worry about. Because we will have them planes. We will take that art. They will get their warrants that take them to prison. Our warrants will take us towards breathing. And it's long overdue that they got what they're actually owed. And that isn't any more of our money. That ain't our kids' money or our great-great-grandchildren's money. I'm sick to the back teeth that we're losing people. It angers me more than any other topic in this entire arena that we're losing good people that won't see that day because they're still allowed to lie and cheat and bullshit and pay people off and curry favour and scratch each other's backs. Soon as one of us is in trouble, they'll move it. And then when enough of them are in trouble, like Boss spoke about with the banks, they'll hide it for 50 years so we can't get access to the truth. Are you kidding me? We've got other countries around the world that, with respect, our countries laugh at, thinking they're crooked as fuck. And they're the ones dealing with naked short selling, sending people to prison. We can't even get people to talk about it properly. Our time's coming because we won't leave. And there's many like me that will put their shares in a will for their kids. And their kids are being educated on what to look for. So moving forward, don't ever give up. They got everything they need, all the tools that they need, access to everything that they possibly need. And they can't bankrupt your company. And if they can't bankrupt your company, what's the difference? It has to be you. It has to be us. It has to be what we've done. And they ain't got an answer for it. So don't you ever give up. I know you won't. You've proved that. But try and encourage people who don't know to take another look. And be patient with your family and your friends that are looking at you like, well, it ain't happened. Well, it ain't happened. Well, it ain't happened. And the day it does, have some humility.
And on that note,
don't become the arrogant bastards that we thought. You know, we weren't
preach
lucky.
it, brother.
We're just patient.
On that note,
Patience is all we ever needed.
I have to call it only because I have to go pick up my daughter from school. But
No worries.
this has been an incredible amount of fun. I hope you guys will join me here again for this very, very soon. I'd be down to do it again tomorrow or the day after, whenever you guys feel like it and can actually make it. I would love that. And I think the 500 plus people watching on YouTube and the 1,000 plus watching on Twitter right now would agree. So thank you, gentlemen, for joining us. Thank you, everybody, for being here with us and for your comments. I wish you peace and wealth. We're going to be so fucking rich.
Diamond hands, baby. Diamond hands.
Let me get that money printer in honor of Cash. Somebody give me a money printer. Who can do a good one? It sounded more like a fart, but close enough. Close enough. Cheers, fuckers.